hindsight, the geopolitical events we've seen take place with Russia and Ukraine were the start of a slowdown in global financial markets, and especially the carbon markets. That collapse was exacerbated by the Guardian's scathing study of Vera REDD Plus carbon offsets in January 2023, and the sector has seen increasing scrutiny around the validity of existing offsets ever since. Now, REDD Plus stands for the Reducing Emissions from Deforestation and Forest Degradation. Essentially, it's a carbon project methodology surrounding the prevention of deforestation. Now, REDD Plus is an investment category, and one of the largest methodologies of carbon offset projects, has killed any momentum this asset class might have been seeing as prices were beginning to bottom out after a massive crash. It seemed like the bearish sentiment was at a peak, but now we have a news story out of Zimbabwe. We have news of the carbon offset project developer, South Pole, terminating its involvement in the Kariba REDD Plus project. This is one of the largest REDD Plus projects in the world. To give you some context of just how large this project is, it's around the size of Puerto Rico. So it's a massive land area. It has issued around 36 million offsets since 2011, selling millions of offsets to Nestle, Volkswagen, McKinsey, and other large firms. South Pole pulled out of the arrangement after the company confirmed that Carbon Green Investments, the primary developer of the project, was allegedly not meeting the standards they expect in project development. If Kariba were to be found fraudulent and shut down, this would require Vera to use the offsets reserved in their carbon buffer pool to account for those already retired offsets. Otherwise, the positive environmental impact of those offsets wouldn't count, and that's a large problem for the sector. Now, an offset buffer pool refers to offsets generated by projects that have been set aside in case of complications, like a forest burning down in a fire. This is used to make sure that the offsets that have been retired were not worthless. Now, given Kariba's size, accounting for and replacing the project's already retired offsets would eat up around 40 to 50% of the total buffer pool, an event this market has never seen in its over 20 years of operational history. The ultimate fallout that we may witness from the failure of the REDD Plus methodology is beginning to rear its head, and I, for one, hope it does not lead to the complete drainage of the buffer pool, because the credibility of this sector would probably be in shambles at that point. I remain optimistic that even in the worst-case scenario, the carbon markets will remain because they fill a vital role in the push towards net zero, and this is the only way to abate some of the more difficult-to-replace emission sources, including many of the industrial applications that use oil and gas. So my confidence that the voluntary carbon markets will remain is high. Now, will Vera be the market leader down the road as this sector grows? Well, REDD Plus is certainly proving to be a challenge for them. We can look at the more liquid carbon prices that trade on the CME exchange, like their NGEO offset or the GEO offset, to get a better idea of what's been going on recently. Although these liquid assets are not necessarily the best barometers of activity in the carbon markets, because most deals of significance are done over the counter currently, not actually on exchanges, but the prices here encapsulate a general trend of massive sector-wide capitulation. Sentiment in these markets has tanked, no one is interested right now, and prices are quickly approaching zero. Some slightly better and more refined indicators to follow are the prices on Air Carbon Exchange, which tend to have more efficient pricing that's separated into more defined project buckets. And we can see that there are still some offsets that go for as high as $15, which is in line with some of the commentary that we've heard from companies in the sector, where they can get prices on offsets from reforestation projects for as high as around over $20 per ton. So there are still some offsets that will trade for significant premiums, but most project types are suffering right now. The only real source of REDD Plus offset pricing information that I've been able to find is a graph on Carbon Streaming's investor presentation, unless I wanted to pay thousands of dollars for that information, which I don't, so this is the best I have. We can see prices for REDD Plus offsets have been declining, which is the red line, and this chart goes up until July 2023. But if we had more recent data, I'm sure the prices are continuing to slide as more controversy emerges. And I don't see how this trend reverses for the foreseeable future, as we're entering a death spiral of negative news coverage. The media and staunch environmentalists are essentially out for blood, and they want to see this sector crash and burn, even though, as I've covered in other videos, we'll either take advantage of the voluntary carbon markets or we'll never reach our climate goals. Yeah, we're in a situation where no good news matters. In fact, mostly what we're seeing is bad news. Companies are exiting the sector. As we've gone over, prices continue to decline. The positive aspects of what this industry has to offer are totally neglected by all sides of the climate change debate. So while I remain bullish because the success of the carbon markets is essentially guaranteed if climate change is real and we try to do something about it, there's no real reasons why I see anything good happening anytime soon. So investing in this space is not for the faint of heart, and it will take patience to see some of the potential upside being projected by investment firms. The voluntary carbon markets are currently worth around $2 billion. Pretty tiny sector right now. Well, you can see there are a wide range of predictions here, but every investment firm is predicting that the VCMs will go up a minimum of 5 times in value by 2030, possibly as high as 125 times if Barclays' predictions were to be correct. Those are levels of upside that you'll rarely see in any industry, and all of this is while sentiment couldn't be any worse. These are the times where fortunes are made, accumulating as many shares as possible in the companies that will dominate the sector moving forward. The ones with the cash to survive a downturn, or at least the potential to reach that point relatively soon. And if a company can generate revenues in this environment where everything is bearish, that's a pretty good sign. The situation reminds me of the mining sector in the 2010s. Stock prices are decimated, carbon offsets are hated by a variety of groups for a variety of reasons, and the commodities will be necessary if we want to achieve anywhere near a net zero world. So while it is uncertain how long it will take, it is inevitable that carbon offset prices will rise, in my opinion. The closer we get to 2030, the more activity we should see in the carbon markets again. The more credibility that we should see return to this space over time. As far as an update for this channel, I've been less consistent with posting on here because I've been reevaluating my goals. While I do believe this channel would succeed long term, I would like to pursue content creation full time relatively soon. And talking about the carbon markets isn't going to make that happen. Environmental investing isn't going to do it either. There just aren't enough people interested in this style of investing, unfortunately. I'm going to try to post maybe once a week on here anyway, but since I would prefer working on videos over getting another corporate job, I need to post about more popular topics and give it my all. So I'm going to make another channel that I'll probably focus on. I'll put out more details about it as I continue to work on setting everything up, but I'm just not going to reach my goals anytime soon if I continue to focus on this channel alone. As far as I know, over the past year, I'm the only YouTuber making content about the carbon markets on any consistent basis. And that's for a reason. While I like making these videos, the amount of time I'm putting in is ultimately not amounting to very much. So I'm hoping to maintain 2 channels, but we'll see how it goes. And thanks for watching as always.